Hi everyone, I'm really excited today to be sitting here with Sarah from Trinity Bookkeeping Services. As a business owner myself, I cannot tell you how many times Sarah's wealth of knowledge has helped me save time and effort, and today she's sharing that wealth with all of us. Sarah has a master's degree in finance, she's a BAS agent, she's an ATSIC agent, NDIS registered plan manager, member of the Institute of Certified Bookkeepers, and a member of the Association of Virtual CFOs.
That's a lot.
Oh man, that's awesome. She has over 25 years experience in the finance industry, having worked in large businesses, not-for-profits, and even the government, where she was involved in sending large budgets to Canberra on an annual basis. Sarah's from an entrepreneurial family and understands the challenges faced by small business owners every day. Sarah has a passion for helping small businesses grow and thrive. Yeah. You started Trinity Bookkeeping Services 5 years ago now.
Yeah, that's
from
right.
a one-man band, and now you have a team of 5. Yeah. It's fantastic, with several long-term clients. Yeah. Sarah specialises in looking after the trades, the service industry, and the hospitality industry. This webinar series is 100% free and is aimed at helping small businesses and small business owners and managers. It's a 10-part webinar series, and it's called Bookkeeping Fundamentals and More for 2020 Vision. And today we present our first webinar of the year.
First webinar.
Yes, and Sarah's going to be talking today about cash flow.
Yeah, that's right.
Yeah.
Before I get started, I'd like to introduce Joe McClure from JM Virtual Business Services. And Joe's been taking care of all my admin and also is part of this webinar series to do all the MC work. And then, fantastic.
Thank you for having
Joe.
me.
Yeah. And we also have Sean Milak from Shipka Design, and he'll be taking care of the IT and the technical behind the scenes work of the webinar today. And before I get started, I thought I'd share with you guys what we're going to be doing and going to be looking through today. So if we can just move to our PowerPoint. So first I'll be asking you guys, the participants, questions on your profit, your financial position, and your financial commitments and your cash flow. Then we'll go through the a cash flow scenario where I'll look at an example of a tradie called Great Landscapes. We'll then go through different types of reporting, cash or accrual basis, reporting versus recording, practical applications within Xero. So what we're going to be doing is we're going to set up this webinar to be a 2-part series because there's quite a lot to cover.
Absolutely.
So today we'll just talk about the questions and the cash flow scenarios, and then we'll follow on with the next. I think that would be the best way to go.
We might break there and then do the types of recording and reporting versus recording in a separate, smaller webinar. So. It's just a little bit of more bite-sized pieces for everyone to take in. It's a big topic.
Yeah. And so I'm really excited about these 10 webinars over the course of this year. And we'll be covering so many different subjects. And I just encourage you guys to just keep that in mind as you go through the months. Each webinar will be just really important for that time of the year. Yeah. So my first question today is, are you trading profitably? That's very important to know.
It's a big question.
That's
I mean,
right.
how many of us know on a day-to-day basis where we stand?
Yeah. If we
should.
Yeah, we should. But if you're trading profitably, my question to you will be, do you know? Yes or no? Or are you unsure about it? So and if you do, how do you know? Does your tax accountant tell you? Do you wait till the end of the year? do you have accounting software that helps you provide that information? And do you keep good records? And how do you keep those records?
Yeah.
Are they accurate and are they up to date? So those
Good
would be,
questions.
yeah.
Mm.
So you don't have to share that with us. You are most welcome to later on. You can contact us and talk about how you record or how you find out whether you're profitable or not. But you can just keep that to yourself and just keep that as the basis of most of our discussions, because ultimately, what's the point of being in business if you're not going to be profitable?
Absolutely. And
Yeah.
and these questions, you just keep them at the back of your mind, but that's really what we're answering when we go through all of these scenarios that we're about to go through. We're just answering those questions. If you can process through all of that, then you've answered the questions that Sarah's asking.
Yeah, that's right. So just a little bit of statistics, and you guys have probably heard this before, but 60% of small businesses close down within the first 3 years, as per the Australian Bureau of Statistics. And 3 years, you put a lot of effort in, and in 3 years it's gone. It's your dream.
It's heartbreaking.
It is heartbreaking. And now when they did the surveys, they found that most of the businesses failed because of cash flow and also strategic management. So cash flow being inadequate cash flow, obviously being the number one issue, and then strategic management being the second issue. So even what we do know, though, is that even if a business is profitable, if you don't have the money and there's no cash in the bank to pay the bills, it doesn't matter if you have profits at the end of the year.
No.
And if it's successful, you could have a great business, but you run out of cash. You can't pay your employees. You can't pay your suppliers. That's the end of it.
That's right. Yeah. All over Red Rover.
All over. So that's the number one question. And the second question I want to put to you is, do you have enough cash to regularly meet your financial commitments? So what are these financial commitments? You'd be thinking, well, we know that we've got BAS every quarter.
Yes.
If you are registered for GST, got to make sure you put enough money aside for your taxes. You need to pay your suppliers, which we've spoken about before.
The other thing, when you're paying your BAS, you have to pay your super.
Oh, yeah, that's right.
At the same time.
Yeah.
Same day.
Yeah. Do you have enough to pay your super?
Yes.
And of course, don't forget that you have to pay your wages as well. Do you have enough for that? And all your other payments that come through. So that's a very important question to be asking yourself. And I've had situations where a lot of my clients have come to me and said, I'm really unable to make my payments. What should I do?
What can you do?
What can you do? So it's about planning. It's about knowing your facts and then taking the action based on the facts and the information that you have. The next question I'll be asking you to think about is, do you understand what cash flow is?
I guess money.
Yeah, it's cash.
It's cash, but flow means coming in and going out, maybe?
Yeah, coming in and going out. However, how many of you know when the money's coming in and when it's going out?
We just cross our fingers and hope that everyone pays.
That's right. So the flow is what we'll be looking at today. How to look at the flow, how to measure the flow, and how to look at what are your fixed expenses when they regularly come in, what are your variables, what do your variable costs actually consist of, how can you plan for that, and how can you make sure that cash in the flow of things is available to you at the end of the day. Are you in the negative? Are you in the red?
Hope not.
Yeah. And if you know that you're going to go in the red, obviously you've got to make sure you have other ways to fund. For example, do you have an overdraft facility, for example? Or will you be taking that money out of your personal funds and putting that into your bank account?
Not ideal, but we all have to do it at some stage, I guess, don't we?
Yeah, at least when you're starting off.
Absolutely.
You don't want to be in that position later down the track.
Oh, goodness, no.
Yeah.
No.
So, okay, guys. So the next thing that I want to talk to you about is let's look at a ideal scenario. Let's look at a scenario where we've got a tradie, because most of my clients are tradies. So I thought let's pick this subject with a tradie, and let's pick an instance where you're just looking at one or two different variables. So obviously, the more variables you have, the more complex the scenario will become. So let's just start with one or two different variables and then move along that way.
Okay.
And you'll soon get the picture. So Sean, would you mind please putting us on now to the scenarios? This particular subby has one job that's recurring. It's a body corp that pays him $1,600 at the end of the month.
Okay.
In fact, it comes through every month, and he knows
that's
you're
great.
getting it.
Having recurring payment like that is great.
Fantastic.
Gotta love that.
We also have now a new job that's coming up. We've quoted 5,800. We plan on doing the job on the 4th of March, and we've figured out that we need about 1,450 in supplies that we need, and we were going to be purchasing that on the 2nd of March.
Okay, well, we've got the money in the bank, so that makes sense. We can do that.
Yep.
So we just go out and buy it.
So we can just go out and buy it. That wouldn't be a problem.
Right.
And at the same time, we've got a couple of other bills that are coming through as well.
Okay.
At the end of every month. We've got a car payment of 1,600.
Well, we need the ute.
We need the ute.
Can't not.
We've got $750 worth of wages from last year. We've got $525 of a refund that we're getting from the tax office, which is fantastic.
Take the boys out for a beer.
Well, I don't know about that. Let's just see how much we've got first.
Maybe we need to plan for that.
Yeah, maybe you need to plan when you're going to take them out for a beer. Perhaps.
But for retention, we should be taking the boys out for a beer.
Yeah.
Just saying.
Yeah.
But that's in our next webinar.
Yeah. Exactly. So the next bit that we've got is, we forgot about the BAS. BAS is coming due.
And you know what happens when BAS gets paid? Super.
That's right.
Oh my gosh.
Get paid as well.
How?
And you can't not pay your super.
Well, no, it's not worth it.
Yeah. So with all of these, if we just take a look at our PowerPoint presentation again, we are currently on the week of the 17th of February. Okay. 17th of February ends on the week ends on the 24th of Feb. We're starting out with an opening balance of 5,860.
That's great.
Yeah, that's great. But this week we've got a few bills coming through. And notice that when we put the new bill, the bills in, at the end of the week, we have 5,557 as a closing balance.
That's awesome.
Yeah.
Yeah.
So that's what we're projecting that there's going to be, right? Then at the start of the next week, which is the 1st of March, we have 1,600 that comes in.
That's from the body corp job.
Yeah, sorry. The second column is actually from the 24th of February to the 1st of March.
Okay.
All right.
Yes, so it's week ending 1st of March.
Week ending 1st of March. Yes. So the money comes in on the 28th, and there it is in the bank. Now, if we look down the column, we see that there's some tax that comes through as well.
Beer money.
Yeah, the beer money. And also, you pay a little bit for your consultant because you have a little bit of marketing and so forth. You've got to pay your
bank fees and things like that.
Yeah, and for your subscriptions, your internet, so forth. And of course, you have to pay for your vehicle expenses.
Oh, that's right. Got to keep the ute.
Yeah, got to keep that ute. Then what you have to, then at the end of that week, you'll have $5,030.
That's still good.
Yeah, that's still good.
Yeah.
Now that's the 1st of March. And you planning to do the job on the 2nd to the 4th, finish the job on the 4th, invoice them on the 4th, and you have 14 days payment terms.
Okay, well, that's all right. We've got the money in the bank. That'll tide us over, won't it?
Well, let's take a look and see if it really will tide you over.
Okay.
So the next bit is we go down to column 3.
Mhm.
And in column 3, you'll notice that you have at the end of the month, the
Mhm.
28th of February, 29th this year,
Mhm.
but on the 28th, you paid out of $1,602.
Oh, what was that for?
That was for the bass we were talking about.
Oh, that's right.
Yeah.
Forgot about the bass.
Well, you have to know how much it's going to cost you, and then plug those figures into your system.
That's right. It's easy to forget about.
It's easy, but you can't just do that.
You can't.
You've got a couple of other costs, and you go down to your local Bunnings and you purchase the items that you need.
Okay.
All right.
That's for this job on the 2nd.
Yeah,
excellent. Yeah. Well, we have
right.
to buy the bits and bobs to do the job.
So it cost us $1,450 to do that job.
Yep.
But we need about $200 to do the body corp job as well.
Okay. So that's 16.
Yeah. $1,650.
Yeah.
So you got $1,650 in there.
Yes.
You go and you use your debit card.
Great.
The money comes out right away.
It's in the bank.
It's in the bank. And oh my goodness, what's happened? Look at what's happened. When you go and pay for all of these bills, you only have $170 in the bank.
Wow.
If you didn't realize that you had to make those payments, and then you had 170 left in the bank.
Gosh, it adds up really quickly, doesn't it?
It does.
$170.
$170. The next week is the 9th of March. 9th to the 15th. So let's take a look at the 9th of March. Well, there's still other bills that need to go up.
Yeah.
Oh my goodness. Your rent is coming out in the mid of the month.
How am I going to pay the rent?
I don't know, but by the end of that month, after you paid your wages, because you got your wages weekly, you've got $750 of wages as well.
Wow.
Once you pay that, you're in the negative.
By $1,163. Where am I going to come up with that money? I'll have to put it on the credit card.
Well, didn't you think that you were going to make the money just 2 weeks ago? You thought you were good. You had $5,000 in the bank.
I know.
And you thought you were getting $5,000 for this job.
Well, I still am getting the $5,000 for the job, but I've got 14-day terms. Yeah. That's not going to be until the end of the month.
Yep, it won't be till the end of the month. And take a look. 3rd week, you are in the red.
Yeah.
But by the 4th week, you're doing all right again.
Yeah. Thank goodness.
Imagine your employees don't get paid and they think,
well, we can't not pay the employees.
Yeah, so
I know.
How are you going to fund it? If this sort of thing happens all the time, do you think the employees will be happy if they don't get their bill?
No way. I mean, we won't keep them. We've got to keep the boys happy.
We do.
No?
So let's take a look at another scenario. So we go down to the second scenario. So the second option is, the tradie decided that he's going to ask for a down payment, a deposit.
A deposit. What a great idea. That'll cover the costs of this, job? This Lara job?
That's right.
Yeah.
The Lara job, not only will you get the money to pay your for your supplies, but you'll also be able to fund something else with it, and you get the money in advance. Now look what happens to your numbers. You can quite easily follow this on the graph, because you're not dipping down. However, you're not dipping below zero. But as you take a look here, the second week, as before, everything is the same. The third week, you get the money in, $3,500. What happens then is at the end of the month, you still have $3,670. Remember last time you only had $170?
Yes.
You got $3,500 more there.
Oh,
what that means?
That's a relief.
Yeah, that's a relief, hey? And what that means is that week 3, starting with $3,670, you end up with $2,336.
I can still take the boys out for a drink.
You can.
Based on that, I can.
You can.
Not in the first scenario.
Not in the first scenario. So what you'll do then the third week is cover all your bills, pay the boys.
Fantastic.
You paid your super. Well, super is not here, but you'd need to find out how much the super was
That's
as well.
true.
Remember, we talked about having a few things in there, not everything. Now, if you start putting all of your other bills as well, it'll give you a more complex situation.
So if my system doesn't have all the information in it, then I'm only looking at half the situation. So I have to keep my data up to date.
Yeah. And this is what we are trying to portray to you, is that you need accurate data.
Yeah, you do.
Right.
You can
and
see.
you need it timely.
Yeah.
What's the point of putting stuff in after you've made the payments? Really? It won't give you a good picture.
No.
You'd be juggling.
Yeah, you'll be taking out of one bank account to put in the other bank account to cover those costs. And then, what am I going to do over here? It gets messy.
It does. So let's take another look at a similar situation. We're doing scenario 3 now.
Yeah.
Perfect. This situation is very similar, but we just are taking a little bit less on the job.
Okay.
So
we
it's a
took
deposit. We took $3,500 first time
for the first deposit. Okay.
Yeah.
So this scenario, it's only taking $2,000 out of the $5,000.
Exactly.
800, was it?
Yeah,
Yes.
5,800.
Yep. Great.
So
Okay.
this also shows you how much you'll have in the bank. However, sometimes you may not be able to get a $3,500 deposit on a $5,800 job.
No.
So you need to know how much money to ask up front to be able to take you through.
Yeah, well, you need the bare minimum at least. I mean, we saw in scenario 1 that if we don't have anything up front, we're going to be left in a hole by the 3rd week of March. So, with only $170 in the bank, we can't pay our rent. So we do need to take something up front. So,
yeah.
So if we're taking $2,000 as a deposit, how will this help us?
If we take $2,000 as a deposit, we have only $1,021 at the end of week 3.
Okay.
However, we'll now get off the PowerPoint, I think, Sean. Thank you.
So we've only got $1,021 at the end of week 3.
Yes.
However, we're expecting, because we've invoiced on the 4th of March and given 14 days, we're expecting them to pay the remainder of that money, the $3,800, in the next week of the 22nd of March.
Exactly.
Okay.
However, what about if you think not 14 days terms? How about I just do 7-day terms?
That'd be better, wouldn't it? You get the money in quicker.
Yeah. So if you got the money in faster, then on the 3rd week of March, you're set. You've done the job on the 4th. The 3rd week of March finishes up on the 15th of March. From the 4th, you've added the 7 days. You've got it in.
Yes.
And Bob's your uncle.
Absolutely. You can pay for everything. You can pay for all of your tax and super. You can pay for drinks with the boys. You can pay for all of the outstandings. You cover the rent, and you can probably sleep better at night.
Yeah.
I know I would.
Yeah, exactly. This is difficult to juggle and leave all of that in your head. What am I doing? When am I doing? Which job am I doing? Who am I going to employ? What do I need for? Just so many things going on. Why do you need to carry this as well? I always believe that the brain can only hold this much information.
Absolutely.
And everything else you can just get rid of.
Well, that's right. Well, I can be told more and more things, but I'm not going to absorb it.
No. So let's look at this tradie. What about if he decided, I want to get a trade account? I pay at the end of the month.
30 days on credit. And that's easy. That's great, because then you're paying the bill after you've received the money from the client.
Exactly.
That's ideal.
So imagine that you do the job on the 2nd. You go to Bunnings. You start off, you go get your items on the 2nd.
Yeah.
You got 30-day terms. You don't pay till the end of the month, on the 30th of the month. That will mean you can hold on to that money to pay other bills.
Correct.
And possibly pay other supplies that you need for other jobs
that you don't have trade accounts with.
That's right.
Yeah.
You could do that. Now, you've got to remember, depending on when you buy, trade accounts are till the end of the month. So if you bought on the 28th, then
2 days.
You've got 2 days.
Roughly.
So then do you make sure that you do jobs at particular times, invoice at particular times? All these are little intricacies.
Yeah, little nuances and little things that you can tweak so that you can make sure that you've got the money coming in and the money going out at the right time that suits you.
Yeah.
It has to suit you.
And that is the flow. And that is the cash that you have at the bottom of the spreadsheet that I showed you, which is the closing bank balance. And you always want to have a healthy bank balance to start off at the end of every day, at the end of every week, and so forth. So that is what cash flow is all about.
Fantastic. Look, I learned a lot today. Really. I mean, I knew that cash flow was money coming in, going out, but how can we make the cash flow work for us?
Exactly.
And that's pretty easy. At the end of the day, it's about understanding where you are, what's coming in, what needs to go out, and things like you could get a line of credit with the bank or a trade account. They're things that you probably don't think of all the time.
That's right, Jo. And with all of these complexities, I've just mentioned a couple of scenarios. Imagine more jobs.
Yeah.
More
employees.
More employees.
Oh, gosh.
More accounts. This was just one account with Bunnings. You might have, a paint spot account, a different account, so many different accounts. And what do you do then?
Yeah.
So that comes to almost the end of this first part of our webinar.
Yes. So
and
part one of webinar one.
Part one of webinar one. We've got so much content.
So much to tell you about.
So much to talk to you about and tell you about and educate you on that we had to actually split this webinar into two.
So that we could cope with it. And then we know if we can cope with it, you can cope with it.
Exactly. You don't want too much all at once.
No.
And so the next part of our webinar will be about reporting and recording.
Yes.
So hang tight for that one.
Thank
you.
Nice
to see you.
Thanks for your time.
Yeah.
Bye.
Join us again. Bye.